Welcome to Trading Nation. I'm Dominic Chu. Joining me is Jeff Saut. He's the chief investment strategist at Raymond James. Jeff, I got to tell you, there are so many questions swirling around the marketplace right now with regard to how we can be at the level we are in stocks with the S&P 500 and the Dow with no real issues with a pullback whatsoever on the horizon. But is that really the case? Are we okay being that complacent with the way things are right now?
Yeah, I think complacent is pretty high right here. Our models that actually called this rally prior to the presidential election turned cautious at the end of January. We lightened up on some positions, raised some cash. So far, that's been wrong-footed, but I will say this, since mid-February, I don't see where a lot of money's been made, Dom, and the S&P was trading around 2350 in mid-February, and that's pretty much where it traded up until the past few hours. So we're still in cautious mode. We were looking for, our model was looking for a pullback to something like 2270, 2280. If we get that, I'd put money to work. But longer term, I still think we're in a secular bull market that has years left to run.
All right, I mean, 2270, 2280 isn't even a deep pullback. We're talking maybe 3-4% from current levels right now. Nothing close to the 10% people have been looking for quite some time. There is one level that so many traders are out there watching. That is this 50-day average price in the market, something called the 50-day SMA, or simple moving average. We are now trading below it. If we close below it, it would be the first time we've done so since right after the election. It's been good support for quite some time now. Do you care about what's happening with this particular level, and does it matter to you and how you're investing money?
It would have a very short-term red flag. It could indicate that we would finally get a test of that 2270, 2280 level. Longer term, it's meaningless. This market has transitioned from an interest rate driven secular bull market where interest rates come down and price earnings multiples expand to an earnings driven secular bull market. You had the profits trough in the second quarter of last year, earnings flipped positive in the third quarter, and they've come in pretty strong ever since.
Fundamentally speaking, we are getting ready for a very, very important earnings season. Some would argue the most important earnings season since the last earnings season. But again, this time around, we got a lot of things to watch. Big banks kick things off on Thursday. JP Morgan Chase, Wells Fargo, Citigroup. How important are the banks to the overall market story right now?
Well, the banks still have or the financials, I should say, still have a pretty large market weighting, as does technology. And I'm expecting good things out of both of those sectors.
Now, financials and technology, the two biggest sectors in the S&P. They're 36% of the overall market there. Technology showing signs of weakness. Financials already showing signs of weakness. Does it worry you overall? We know that you think it's a short-term pullback. If there is one, how important is the tech and financial thesis to what's going on?
I think that they're very important since they're a big heavyweight of the market indices. But I think this is just transitory. I think that the financials are going to do very well under a lower regulatory environment. And I think some of the rules are going to be changed for the financials that are going to be very beneficial.
Again, you mentioned earlier that you've been lightening up on positions, but you have missed a little bit of this rally since the end of January, early February. What is the risk reward? How should people be viewing sitting on the sidelines right now in a market that seems to have maybe gotten a little bit away from them right now?
I am never 100% cash. I'm right now at about 25% cash. And that's just because our model said to be cautious. If you're sitting on the sidelines in 100% cash, I don't think you should be worried about another 3 or 4% pullback, which would bring the total pullback, by the way, to 6 or 7% from the highs. I would not be waiting. I'd put some of that money to work right now.
Jeff, we've joked around sometimes about this idea that this is the Taylor Swift shake it off market. It stays within 2% of record highs right now, despite the fact that we've had what appears to be a chemical weapons attack in Syria, North Korean tensions, trade talks between us and China, us and Japan coming up later on in the month. All of these things are risks that would normally have taken the market down, but they're being shaken off right now. So what in your mind, as the chief investment strategist here, what in your mind really takes this market down? What do we have to watch out for?
Well, I think you would have to watch out for a black swan event. I mean, if there was a nuclear incident with North Korea, that would certainly give you more than a 5 to 10% correction. I don't think that's going to happen. I think a lot of these things are just tertiary worries. The fact of the matter is the equity markets really don't care about these absolutes of good or bad. All the equity markets care about is, are things getting better or are things getting worse? And things are getting better fundamentally.
Last question to you, Jeff. As you look at what's going to happen with earnings season, are there certain particular parts of the market that you're looking to beyond just the banks for some kind of an indicator, some kind of a sentiment gauge about where the markets can go from here?
I look at a bunch of different, I would call them thin reads. I go through my day collecting these thin reads and then try to weave them into an investment basket. So it's not just one indicator, it's a basket of indicators.
And which ones are the most important right now?
I would say earnings.
All right, earnings. And of course, we get earnings season kicking off in earnest on Thursday with the big banks. Jeff Saut, thank you so much for joining us here on Trading Nation. Always watch those banks. They do set the tone for a good part of the earnings season, guys. Thank you so much, Jeff, for your time. And thanks for watching Trading Nation. I'm Dominic Chu. Catch more on tradingnation.cnbc.com. Until next time, we'll see you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.